Hey guys, this is Creedmoor with the Bullish Bears. I've had a few people ask me about the pattern that we saw the other day on ACRX, so I'm doing a quick little video on this to just help you identify the pattern, what you need to look for to make this pattern work, and how to kind of play this pattern. So this will be a real quick video, real simple. Okay, so this is a lot like a V-bottom pattern, but it doesn't quite give the same parameters. So this is ACRX, and you can see right here in the pre-market, it just started dipping down a lot here, and then we have this nice large spike up through here through the rest of the day. Now, primarily playing this pattern, you can anticipate this move right in here. The rest of this day was kind of a surprise. It kind of had nothing to do with this. This was later on driven by news and a bunch of other stuff. But the main part we're focusing on is this pre-market session here. Now this can happen in both the pre-market or through the middle of the day. But the main thing to keep in mind with this pattern is that there is no catalyst for it. So if there's a catalyst like the company's being investigated, they're being reported for fraud, all kinds of stuff like that, and that's what's causing the stock to go down, then this pattern's more than likely not going to work. You may catch a dead cat bounce out of it, but that's not this pattern. So if we come back here to the news, if it'll pull up for me here, there we go. Okay, so you can look back here at the news to the 10th, and in the morning here, there was nothing. This was the only news right here, and then this came out later on. But to start with in the morning, this was it. That's all we had. There was no news to drive it down, and then later on there was no news to drive it down. Let's zoom in a little bit here. So, this was the close of everything, and then we keep looking. Okay. So you see these large candles just down. What this is it's panic selling. This is just people that, oh no, the ticker's going down, and they saw it going down here. They were selling out, and there was so much selling that it triggered the other candles, and then those candles triggered more all the way down here to the base. A lot of people call it a falling knife and a couple other things. What you want to look for is this second confirmation candle here, and that really tells you that the fall is over and that you should start seeing this again. But like I said again, the main non-catalyst is that there has to be no news for it. So if there's news and it goes down, more than likely you're not going to see this pattern. But if there is no news and then you see all this unnecessary panic selling, then we should see this correction. Typically, whenever I've seen this pattern, you do see a correction of 50% of the fall at minimum. But again, that varies. Like, no one can call the top or the bottom or when it's going to reverse. But a good idea. So we had the bottom here at 124, the second confirmation candle, and then we see it here at a retracement back here to the support at, let's use the base, 160. So 124 up to 160. Even if we called it 130, you know, that's 50% there. So anyway, that's what you want to look for. No news and panic selling, and then look for the correction. I played this one a couple times as it continued to go up, and it just rode this support all the way up into a ascending wedge pattern here, and then it actually broke out of support here. So one way you could play this is get in on the second candle here, and then play it till you see the second red here, and draw you a good support line. Get in again if it looks good, and hold it until it breaks support. And then, you know, as we always say, you know, sell at resistance and buy at support. But if this is breaking support, then you have a good inclination that it is going to go down. This one actually didn't. But typically, when something breaks support, it goes down. So that's a good way. Get out of the trade when it breaks support. But we have the open here, and then it actually, with that new news, it continued to tick up. But the main focus was that pattern right there. Real simple pattern, real easy pattern. It's not a common pattern, though. Like I said, the company has to be panic selling and there has to be no bad news on it and, you know, just unwarranted panic selling. That's when you're going to see the correction. As people seeing, wait, there was no reason for this to go down. Let me go ahead and buy this ticker at a discount, and then I'll sell it for a profit later on. So anyway, that is that pattern. I really don't have a name for it. I guess you could call it a panic sell bounce. But a few other people have covered this pattern before. Like I said, it's not a super common pattern, but when you see it, you see it. The only real scan you can do to possibly pick it up is do a gap down scan in the morning, and anything that's gapping down that far, you then see that and then look for the second confirmation candle that the gap down is over, and then try and play it off of that. But to be honest, there's no real, like I said, it doesn't have a catalyst, so the only thing that's going to pick it up would be a gap down scan. But again, that's still iffy. So anyway, this has been Creedmoor with the Bullish Bears, and remember, your trade is in the history. Thank you, and have a wonderful day, guys.